guys, angizohlala kini. What's up, guys? Guys, just confirm for me if you can see my screen. You should be seeing what time frame chart on Nasdaq. 3 minutes chart on Nasdaq. Can you confirm for me if you can hear me, and if you can see my screen, please? Okay, cool, great. You can see me and can hear. You can see me and you can hear my. You can see my chart and you can hear me. Okay, sweet. Now, first things first. Let me show you guys something. Okay, what I was talking about in the group this morning. Well, this afternoon rather. If you guys can pay attention to the economic calendar today. Pay attention to Monday, the 19th of Feb. 2024. All day. Canada and the US. We have a bank holiday. Okay. If we have a bank holiday like this, obviously it means that people will not be working. So the markets, the Wall Street guys will be closed. They will not be at work, which means there's going to be little to no volume in the market. Okay, so that's what I was showing you guys. Okay, and then if you take a look, going to be happening tomorrow as well. Okay, Tuesday, the 20th on USD, we are not going to be having any high impact, medium to high impact news. Okay, so this technically means tomorrow is probably going to be another low probability day. Chances are the market is not going to move much. Okay, it's going to continue with this consolidation that we're currently having. Okay, and then on Wednesday we have FOMC, but that's only at 9 p.m. Okay, Wednesday we have FOMC, that's only at 9 p.m. Wednesday we have FOMC, that's only at 9 p.m. though. That's only at 9 p.m. So, which means it's in the afternoon session, which means on Wednesday, you can only trade the morning session. Okay, which means you can trade between 8:30 and 12 p.m. Okay, 8:30 in the morning to 12 noon on Wednesday. That's what you'll be doing. Thursday we'll be having flash, so we're going to be having a bit of volatility. So, in essence, this week, the best days to trade is Wednesday and Thursday. Friday, we also have medium impact news, but I mean, it's at 2:35 a.m. So this is probably not going to be the best day to trade as well. So this is basically how you narrow down the days that you'll be trading. So if you are one of those people who struggle with, when do I trade and when do I not trade, the economic calendar is going to show you exactly when to trade, exactly when to not trade. Now, let's go back to Trading View. Okay, I want you guys to take a look at what happened this morning, or this trading session, rather, today's price action. I want you guys to see what, and tell me if this is the kind of market that you want to be participating in. And that is why it's so important for you guys to know when and when not to trade. So this is today. Okay. Which Wi-Fi am I connected to? So why is it a bit slow? Okay, so this is today, the 19th, right? This is today, the 19th. 3 minutes chart. Okay, so where I drew this line, from where this orange line starts going forward, all this is today's price action. All this is today's price action. Can you guys see how much of a consolidating market this is? This is the type of market that you do not want to be participating in. Okay, because you'll be trading here and it's literally not going anywhere. It's just going to mess up your mental capital. Okay, you do not want to be participating in such markets. So it's extremely important for you to know first when not to trade, because knowing when not to trade makes it easier for you to actually know when to trade. Okay, when not to trade makes it easier for you to know when to trade. Okay, so tomorrow we'll probably have another day like this, low volume day. There's probably not going to be a lot of movements in the market. So days like this, you take them as your day off from trading. However, you still go back on the market and still continue learning. Okay, you still learn and journal and all that shit. Okay. Moving on to then something else. Let's take a quick review on last week Friday's trade. Last week, no, was it on Thursday? Sorry, it was on Thursday, right? It was on Thursday. So this here, I wasn't participating on Friday. I wasn't trading, but this was Friday's price action. Okay, this was Friday's price action. All this here going down. I think it was not, can't be the 12th. I'll tell you now. Friday was the 16th. Friday was the 16th. Oh, here it is. So this going forward from this line going to the left, that's last week Friday's price action. I was not trading that. What were we trading? We were trading this movement over here. This is what we traded last week. Okay. There's still a video on. It's uploaded. I know it's because we were live on YouTube. It's still there. It basically shows you and I was basically trading live, and I was just sharing with you guys what is it that I expect and why am I expecting it, and why am I expecting the market to do that. Okay. So I think it's extremely important for you to go back and watch. It's quite long and it's quite boring because I mean that's just what trading is. Boring. This is not entertainment content, unfortunately. So if you noticed what price did on that, on the same things that we've been doing. I'm going to emphasize on what we've been doing. Okay, because remember, repetition is the father of learning, right? So when price opened on Monday, no, sorry, on Thursday, price basically consolidated. I want to show you the 930 candle. This is going to be our 930 candle just here. 830. This price going up over here. This is our 830 candle. So 830, what do we expect? We expect the market to be opening, right? When the market opens, in most cases, what do we expect? We expect price to come give us a what? A stop hunt somewhere, right? So 830 price opens and does what? Gives us a stop hunt. Here's our stop hunt taking what? Buy side liquidity. So buy side liquidity has been taken over here. Buy side liquidity has been taken. Here we go. Why is the settings button different now? Buy side liquidity. So buy side liquidity has been taken. Price goes up, shoots up, takes buy side liquidity. At the same time, price takes what? Buy side liquidity from up there. Right? So if I can just clone this. So this 830 candle does this damage, right? Takes out buy side liquidity. After taking out buy side liquidity, what does it do? It starts going the opposite direction, right? Starts doing what? Going down. From here, price starts going down, 8, 9, and then price does what? Shoots down. This is around 930. 930 candle should be around here. This is 930. Price basically just continues going down and starts basically consolidating, right? Price basically starts consolidating at this level over here. Price basically starts consolidating at this level over here. At this level, right? Now, this is 5 minutes chart. If we can simply just jump down to 15 minutes, you will notice, again, if anything, you can go back and watch that video because we were live and we were explaining these things as they were happening. That's where you basically get to see my thought process as we are busy trading. Okay, this is basically how we look at the market. Okay, now, as price was going down over here, when it took out sell side liquidity over here, took out sell side liquidity over here, my attention, because it's specific times, this was 9:30 to 10. a.m. New York time. I then moved my attention to this level over here. Saying, okay, if price has basically a sell side liquidity again, and then at specific times, which is now our what? At specific times, which is now our what? Our New York kill zone. Price comes at a fair value gap, right? Efficiency. When we saw that price is failing to break this fair value gap, and looking at the fact that this specific fair value gap was tested after sell side liquidity was taken over here, liquidity was taken over here. So let me just draw those with you for you. There was sell side liquidity over here. Obviously, there was sell side liquidity over here, and there was sell side liquidity over here. So the damage has been done on the sell side. So meaning everyone who was short over here has been what? Has now been taken out, right? I mean, who was long over here, who had their stop losses at these levels, has now been taken out. And then price bounces at a specific level, which is a fair gap on M15 and 30 minutes chart. Okay, price bounces on that fair value gap. And now I want you guys to pay attention to something else. When we noticed that, okay, price is bouncing at this fair value gap, but look at the bodies, right? Yes, the spikes can go down. Yes, they can spike that level. However, look at the bodies. The bodies are staying within this fair value gap. They are failing to close below the 50% of this fair value gap. Of course, we did come and spike this level at around 11 and then quickly went back into the range. But predominantly, look at what the candles were doing. They were failing to close the gap, right? This is a bullish sign. This is another sign that tells you that, okay, price might be ready to start moving to the opposite direction. And then that's basically when you move to your lower time frame, which is your 5 minutes, 3 minutes, 1 minute. This is basically where you want to do what? This is basically where you want to now look for your possible setup, look for your possible entries. Okay. This is where you want to look for your possible setups, look for your possible entries. And you look at those entries from the lower time frame. Those entries, you find them on the lower time frame. That is basically what because I never got to host another session that day. The live trading session lasted longer than I had anticipated. So if I wanted to host a session again, I was tired. Honest with myself and say, nah, I won't be able to. Okay. So I'm just gonna zoom this price action in and go on the 5 minutes chart. Okay, I don't know. Okay, in the meantime, if you guys have any questions, you can just basically go ahead and type them in the box there, in the chat box. Let me see if there's any questions. You're breaking. Okay. Let me see. Let me move. I'm in another section now. Can you guys hear me better? I'm in another section. Can you guys hear me better? My signal strength seems better. Much better, actually. So, yes. When was this? The 16th. I think this was on Thursday. No. Yes. So here we are. And then we basically started moving to the lower time frame. And this is where we basically our trade. We took our trade somewhere at these levels. I remember I missed my entry. Oh yeah, this was it over here. I remember I missed my entry because of technology, but my entry was somewhere here. Then price obviously went on to consolidate for a while, consolidate. My target was obviously coming back to the what? To the buy side liquidity. I wanted to see the market taking out this buy side liquidity that it had created in the morning. Okay, that was basically my anticipation on this specific trade. And if you take a look at what I'm talking about on this trade, it's exactly what we always talk about. There's nothing different that we really did. There's nothing, okay, great, man, thanks. There's nothing different that we really did on the day. Okay, really nothing different. It's just, okay. I still struggle using this thing. I'm literally getting used to it. What is this? Dot cross. I'm still trying to get used. Oh, but I can just right click and remove drawings. I'm still struggling to use this thing better. Like I'm still trying to figure it out. Okay, but nonetheless, that's basically what my thought process was as I was I was I was I was taking the trade, and I wanted to see price basically going up to take that buy side liquidity. Now, looking at this week's projections, looking at projections, let's have a look at this. Last week we basically had a bearish candle, right? We had a bearish week, as you guys can see. This is a weekly chart. Last week's candle was predominantly bearish, right? Which means what? Maybe we are going to take a small retracement before we're going up, but we'll see. However, looking at the weekly chart, I would say the market is still very bullish. And I would want to be bullish on this market until I see this market breaking this level. This bullish order block on the weekly chart, if price can basically come down and break this level, close below this bullish order block, then I would now say, okay, I'm changing my bias. Chances are price is now going to be what? Chances are price is now going to be bearish. But until I start seeing these bullish arrays being broken, then I'm still basically bullish on this market. Okay. However, just because you are bullish on the market, it doesn't necessarily mean that the market is going to keep going up and up and up and up and up. Obviously, it's going to give us setups to the downside. Obviously, it's going to give us I'm a sell setups, I'm a buy setups at certain days. Even though we're on an uptrend, we're still going to be getting those short-term sells. Even though we're on an uptrend, on a downtrend, we're still going to be getting those short-term buys. However, if you're going against the overall bias, what you then need to do is you need to reduce your risk. Okay, reduce your risk. So if price is going down like this, if price is going down, since already you guys have seen, let me show you quickly on the 5 minutes. This is 15, sorry. You guys have already seen what price did last week, right? This was the last trade on Thursday. Price took out buy side liquidity, right? Price took out buy side liquidity at this level. After that, it basically shot down. Okay, so going over to the 4-hour chart. Going over to the 4-hour chart. Going over to the 4-hour chart. This was last week Friday's price action. So after price took out buy side liquidity over here and obviously over here, there was this bullish order block over here. Bullish order block on the, that's why I'm thinking we are short-term bearish. This bullish order block was broken heavily and then came back, they retested it. Look how nicely it behaves at the 50% of this bullish order block, which now is obviously, it's like it becomes an inverse, right? It becomes a breaker now. So this becomes a breaker block. So after we broke this breaker block, look at the 50%, how nicely we respected that, and then price basically shoots down. Okay, so if price does this, now I'm looking at it to do what? To come test what? To come take out the sell side liquidity over here, sell side liquidity over here. Okay, those are the two things that I'm looking at. However, if I go to the daily chart, okay, if I go to the daily chart, what I do not want to see, I do not want to see the market closing below. I do not want to see the market closing below this bullish order block over here. Okay, I don't want to see the market closing below. If the market starts closing below this bullish order block, if you notice, this is almost the same level as the one I was showing you on the weekly. Okay, this is still this one. But however, on the weekly, I don't want to see it closing below here. And then if we refine it further to the daily chart, I don't want to see it closing below these levels. If it closes below these levels, then obviously we would have to wait for it to check how it's going to react on this bullish order book on the weekly. And these are our invalidation levels. If price goes and takes those out, then it's now telling us we are changing a direction, probably to the downside. Okay. However, if price comes back down here and continues respecting this bullish arrays and continues going up like this, then I would say this is probably a fake move, not a fake move, sorry, a retracement down. Obviously, price has been going up, then it gives us a bit of a deep retracement and then continues to go up. And if it does that, looking at this wave over here, from up here to down here, from down here to up there, when price gets to this bullish over here, that's when we'll basically be at 50%, which is our equilibrium of this whole move. Okay, so that's what I'm looking at on Nasdaq. If you look at US 500s, that's something that you guys will do on your own that side. Look at US 500. You'll see something almost similar to this. Okay. However, at this point, what I see is that the Nasdaq is basically more bearish than the S&P 500. Okay. From what I see, the Nasdaq is more bearish than the S&P 500. The reason why I'm saying that is something that you guys need to go on your charts and find out. Okay. I need you guys to go on the chart on your side and find out why do I think the Nasdaq is more bearish than the S&P 500. And if that happens, and if I see that Nasdaq is more bearish on a specific time like this, if I see that Nasdaq is more bearish, then what I would basically want to do is I want to sell Nasdaq and use S&P 500 as, or ES as the way of confirmation. Okay, so I use ES to confirm that yes, we're bearish, but I'm only going to be selling NAS 500, NAS 100. Okay, so that's basically how you use them. If it was the other way around, where you see the S&P 500 being more bullish than the Nasdaq and your bias is bullish, then you basically want to use Nasdaq to confirm the bullish movement that you're expecting to see on the S&P 500. Okay, I hope that makes sense. I hope I didn't confuse you there. It's not really complicated, but that's basically what I want to get. Okay, switching over to the DXY, right? Switching, this one Gonja doesn't want to use DXY, ne? I wonder. And then this one doesn't wanna. This one doesn't wanna use. Give me a second. I just need to sign out of this account here. I don't know why it doesn't allow me to. Let's check now. DXY. Here we go. DXY. Here we go. Okay. Okay. Now, looking at DXY. Looking at DXY, let's just jump to the weekly chart. Let's jump to the weekly chart. Now, remember, DXY, in most cases, guys, and not all the time, right? However, this is what we want to see. We want to see an inverse correlation between the DXY. We want to see an inverse correlation between the DXY and the futures market. Meaning, if we see DXY going up, we want to see the futures market going down. Okay. Now, with that being said, looking at the DXY, obviously you can see that the DXY has been what? Going up crazily over the last few weeks, right? 1, 2, 3, 4, 5, 6, 7. 7 weeks, the DXY has been going up, right? We had this bearish array over here, which then switched my bias to bullish on the DXY until I see certain things happening at certain levels, okay? We had this bearish order block. If we were heavily bearish, on the DXY since DXY was dropping here, we were not supposed to go through this what? This bearish order block. It was supposed to come to this bearish order block, come down here to basically take out the sell side liquidity. Okay? And that's what I was anticipating. But obviously, as you guys can see, I was wrong. Right? That's what I was anticipating. But then DXY instead, it did what? It shot up. And if you notice what we have over here, we have buy side liquidity at these levels over here. If we could go to the lower time frame, you'll notice that we have what? Clean buy side liquidity over here. Also, you must notice something. We had a bearish fair value gap over here, which was tested here, but was not completely closed, right? We had a bearish fair value gap over here. This is the weekly chart. Bearish fair value gap. And I remember discussing this with you guys in class saying, I want to see how price is going to react at this level. Okay. Now, at this point, price did what? Came here, hit this, and closed this whole CB, this whole fair value gap. Price closed this whole fair value gap and did what? And went up a bit more to do what? Actually, well, I've logged out of my account, so it's gonna do these things. It's gonna close. What was I saying? What was I saying? Price basically tested this whole fair value gap, right? And went back to test this bearish order block over here. But then it failed to close at the 50% of this, right? It failed to close 50% of this fair value gap. So what does that mean? This tells us that if we basically want to look for bearish movements, then we can start looking for them because price has failed to do that, to close at these levels. However, then the problem becomes this bullish order block over here. Since this bullish order block was disrespected, this becomes our what? This has become our breaker now, right? If price now decides to go down like this, then it might want to do what? It might want to test this breaker block and continue going up to do what? To take out its buy side liquidity over here and over here. But with that happening, we're basically going to see that this coming week. If price respects this bearish order, this bearish thingy, if price does actually respect this level, then I would expect it to basically go down and take out the sell side liquidity, also close this inefficiency over here, which is this fair value gap over here. Okay. Which is basically this fair value gap, right? Now, these are all my invalidation levels. Obviously, as the week goes by, as the days go by, we basically analyze the market and see what it's trying to do. We do not force our analysis on the market. That's why it's so important to have invalidation levels. Like there's a level that you are looking at saying, and this is the mistake I think I used to make also when I was starting, where I would say price is going to that fair value gap and then go down. So what I would do is I would put my over here at this fair value gap, and then price would sometimes go at my fair value gap, go down and go my direction. I would get a very nice entry. However, you then go realize, no, even though price gets to that fair value gap, it still needs to tip its hand and show you what it wants to do. Now, that's very important. If it tips its head and say bearish fair value gap on the higher time frame, go on the lower time frame, you see that shift in market structure on the lower time frame, see that stop hunt high or stop hunt low, see the shift in market structure or in market in see that shift in market structure. I don't know why these dogs are barking. Let me just close the door. Sorry about that. Sorry about that. Anyways, screen is blank. Stop sharing. Let me share again. Is it fine now? Is it fine now? I need you guys to confirm for me if the screen is fine now. Guys, can you confirm with me if the screen is, you guys can see my screen now? Okay, it's fine. Let me check on my side. Okay, seems fine. Okay, cool. This is what I was explaining. This fair value gap over here. I was explaining price going up, testing this fair value gap on the weekly chart, which is from here to here. So we have this fair value gap. So as price was shooting up, we're paying attention to this fair value gap and price, how price is basically going to react at this level. That's basically what I've been saying. So price shot up, bounced at this fair value gap, but also take your attention to this bearish order block over here. This bearish order block over here. Price also failed. Bounced at this order block right here. Even though it failed to get to the opening of that, but it basically bounced at that level. Also respecting this fair value. Okay. Now you know what the challenge is with this trade. At this point, we are in the middle of a raise. Okay, we are in the middle of a raise, right? Meaning we are bouncing between this fair value gap and this breaker block. So we basically wanna see price, for us to be confident on our buyers. We wanna see price leave this area of consolidation. We wanna see price leave this area of consolidation. And now, if we take a look at this from up here to down here, we are playing around the 50% level, and price usually consolidates at the 50% level. You see me logging out of my account now. This thing is doing these weird things. What is this thing doing? Here we go. Yes. So we are around the 50% level. And if we see price at a 50% level, basically what we usually anticipate is that we're going to have a what? We're going to have a bit of a consolidation. So don't be surprised if you see a bit of a consolidation this week over here. Simply because of what I just showed you guys now. We are trading in between two very strong arrays, which is this is a bearish array, this is a bullish array. So we are trading in between these two, right? So since we are trading in between this bearish fair value gap, or maybe let's just look at it as these two candles. If we're trading in between this green candle and this green candle, bearish order block, bullish breaker. We want to see price leaving this area of consolidation, and we are at 50% of this whole wave. When we are at 50% of this whole wave when we check our equilibrium and discount. This is 50%. So anytime you see us playing around the 50%, in most cases just expect a consolidation. So with that being said, do not be surprised when you see this week being mostly a consolidation on the lower time frame. Okay, don't be surprised when you don't see too much of a trending market, especially on the DXY this week. If that's the case, remember the DXY is heavily influences the Euro USD and the GBP USD. If we have a consolidating profile, this chances are Euro USD and GBP USD is also going to give us the same thing. When it comes to futures, the DXY is not so correlated with it is correlated, inversely correlated rather. However, they sometimes do move in tandem, which means they sometimes do move in one direction. However, I do prefer trading with more risk when I see the DXY and the futures, which is my and Nasdaq and S&P moving the opposite direction. If I see DXY going up, I prefer to see the futures markets going down. Okay. And at some point, even though they do go the opposite directions to each other, at some or maybe they do go the same direction rather, sorry. At some point, they actually do come back and start being in alignment again, where they now start, if this goes up, that goes down. If this goes up, this goes down. Okay. It does happen that way as well. So those are the things that you just basically need to look at. Okay. These are the things that you basically need to look at. And then the other thing that you guys can basically look at is your I'll show you now. Another thing that you guys basically want to look at is your yields. Okay. The US government bonds yields, which is basically your interest rates. Okay. So you want to analyze the interest rates and understand exactly where they're going. You do want to analyze this mostly on the higher time frame. Okay. So you're going to analyze the 10-year. I've done this with you guys before. You're going to be analyzing the 10-year, 5-year, and the 30-year. Okay. 5, 10, and 30. Okay. Basically, what these do is they basically lead, or they tell you where the market is going long term. Okay. Remember, interest rates basically tell you that the market is either getting a cash injection, or there's money going out of the market. If the interest rates go up, then that means more money comes in, which means the dollar is going to be strong. Okay, that's just not physics. Sorry, what is it? Economics, right? So if you analyze these and you see that, okay, with this one, for instance, we see that, okay, took out sell side liquidity over here. After taking out that sell side liquidity, basically shot up. And then at this point over here on the daily chart, what to do? We basically had a fair value gap, tested this fair value gap and started going up. If you check also the 30-year and the 5-year, you'll see something almost similar. Okay, which tells us that the which tells us that basically the yields are strong, right? Which means the yields are going up. If the yields are going up, chances are the dollar is going to go up as well. Okay, so this is how you basically use. When I say to you guys, you need to have a narrative. This is basically what I'm talking about. Saying, yes, you think the dollar is going up, but what other factors do you have that confirm that your dollar is going to go up? These are the things that you basically use. Okay. The analysis is basically the same. It's just that you need to know what's okay. If these are going up, that needs to go down. If this goes down, then that needs to go up. I don't know if that's confusing to you guys, but the terms that we'll be using is exactly the same. Okay. And then when you also look at the bond market, is it the bond market? Wait, I'll tell you now. But before we actually move on to that, do you guys have any questions? It's been 43 minutes of me talking nonstop. Do you guys have any questions before we move on to something to, to something else? We've done this before where basically analyze the yield with you guys and stuff. But do you guys have any questions before we move on? Okay, I take it there's no questions if that's the case. Let's do this. Let's make this a full lesson for tomorrow. Okay. Let me make this a full lesson. I don't remember how much we went through it. I don't remember how much we went through it, but let's make it a full lesson for tomorrow morning. Not morning, but for tomorrow evening. Okay. I don't know. My head operates in New York time. My head operates in New York time now. So let's make this a full lesson for tomorrow. Basically, we'll be looking at how we use the bond market and the yields and the dollar index to basically come up with our narrative. Okay. I'm sitting on the couch here, so it's a bit uncomfortable because I had to move from that side since my network was not best. But if there's nothing else from you guys, then just go through what we spoke about today, okay? And tell me if you have any questions. We'll be running these sessions for the last month in Feb. No, sorry, in March. March will be the last month, which would be 3 full months running this session. So in the next few weeks, we'll be closing down these. So you guys need to get as much info as possible because after that we probably won't be running any. So with that being said, guys, let's see you on the other side. Okay. Good night. Just go practice what I spoke about in terms of the Nasdaq and in terms of Nasdaq and S&P 500. Okay, and also look at the bonds and at the bonds and the yields. Okay, and we'll see you guys tomorrow.